Hello and welcome back to Explain the Charts. Today is October 10th, 2025, and we are taking a deep dive into one of the most talked about stocks in the market, Amazon, ticker symbol Amazon. We'll cover the latest news circulating about the company and then jump into the charts to see what the price action is telling us. There's a fascinating narrative developing around Amazon, with conflicting signals that every trader should be aware of. First, let's talk about the current events shaping investor sentiment. There's a lot of positive buzz stemming from the recent Prime Big Deals Day, which is seen as a strong start to the holiday shopping season. Additionally, the company continues to make headlines with its satellite internet ambitions and new AI and cloud product launches. However, the story isn't all positive. Bloomberg and other outlets have highlighted intensifying competition in the cloud space from rivals like Microsoft's Azure and Oracle, which could pressure the margins of Amazon's profit engine, AWS. This has been a persistent concern for investors, weighing on the stock's performance compared to other Magnificent Seven members this year. Despite this, many analysts remain bullish, with price targets ranging from $260 all the way up to a bull case of $350, citing growth in AI and new ventures. Interestingly, a key theme emerging is that Amazon might be transitioning from a high-growth tech stock into a value stock. Benzinga points out that its valuation is at a 10-year low, even after a 700% rally over the last decade. This suggests that while the market is cautious, the company's fundamentals remain robust, with improving free cash flow and strong profit margins. This creates a major disconnect between the company's performance and its stock valuation, a scenario that value investors look for. Now, let's switch gears and look at what this all means on the chart. Here on the daily chart, we can see the broader picture of AMZN's performance over the last year and a half. The stock has experienced significant volatility, with a 52-week range between roughly $161 and $242. The $161 level, hit back in April, represents a major area of long-term support that has held up strongly. On the upside, the area between $235 and the all-time high of $242.52 serves as the primary long-term resistance zone. We can see several major swings, including a sharp drop in early August 2024 and another significant one this past August. These moves highlight periods where market sentiment shifted dramatically. The overall trend since the April 2025 lows has been decidedly upward, forming a pattern of higher highs and higher lows, which is a classic bullish structure. However, the path has been choppy, indicating a constant battle between buyers and sellers. The current price of $227.74 places the stock in the upper portion of this year-long range, suggesting bulls are currently in control, but it's approaching a critical test. Let's zoom in on a particularly interesting period this year. I want to focus on late July through mid-August 2025. As we can see here, Amazon reported very strong Q2 earnings at the end of July, with revenue beating expectations. Despite this, the stock gapped down massively from a close of $234 on July 31st to an open of just $217 the next day. This dramatic drop was a direct reaction to the company's weaker-than-expected forward guidance and a perceived lack of clarity on its long-term AI strategy. This event created a large bearish gap on the chart, which often acts as a resistance area in the future. The price then bottomed out around $211 a few days later before beginning its current recovery. This shows how powerful forward-looking statements are, often overriding even stellar past performance. Now let's switch to the 1-hour chart to analyze the more recent price action since late September. Looking at the past couple of weeks, we can see the stock has been building a base of support. The price has established a clear support zone around the $220 to $222 level, which has been tested multiple times and held. Each dip into this area has been met with buying pressure, creating a series of higher lows on a smaller time frame. This is a constructive, short-term bullish pattern. On the upside, we're seeing resistance form near the $228 level, which the stock is currently challenging. A decisive break above this level would be the next bullish confirmation for short-term traders. The price action has been consolidating, tightening into a range, which often precedes a significant breakout or breakdown. Volume has been relatively consistent, suggesting accumulation in this support zone. This tightening range indicates that energy is building for the next major move. For an even closer look, let's pull up the 15-minute chart focusing on the last trading day, October 9th. Yesterday's session showed significant strength into the close. The stock spent much of the day consolidating after an initial dip. However, in the final couple of hours, we saw a very strong surge of buying. The price rallied from around $222 to close near the day's high at $227.74. This type of finish, a strong close on high volume, is often a bullish signal for the following day. It suggests that institutional buyers were stepping in, possibly front-running positive news or simply feeling confident at these levels. This powerful end-of-day momentum is something traders should definitely take note of heading into today's session. So, to recap everything, let's go back to the daily chart and outline the key takeaways. Your critical support levels to watch are the immediate zone at $220 to $222, followed by the major post-earnings low around $211. A break below $211 would be a significant bearish development. On the upside, immediate resistance is at the recent consolidation high of $228 to $230. Above that, the next major target is the all-time high region around $242. Now for some unbiased predictions. The bullish scenario, which I would place at a 60% probability, is that the recent buying pressure continues, pushing the stock above the $230 resistance. If this happens, a retest of the $242 highs becomes very likely, fueled by the positive holiday season narrative and the stock's relatively low valuation. The bearish scenario, with a 40% probability, would see the stock fail at the $230 resistance and break below the $220 support level. This could be triggered by negative macroeconomic news, such as tariff concerns, or any company-specific news that highlights the competitive pressures on AWS. A break below $220 would likely lead to a retest of the $211 lows. Things to watch for moving forward will be the next earnings report, any announcements about AI monetization, and holiday retail sales data. These events will be the primary catalysts for the next major move. Thank you for watching this analysis on Amazon here at Explain the Charts. Please remember, this video is for informational purposes only and is not financial advice. Always conduct your own thorough research and consult with a financial professional before making any investment decisions. Be sure to like and subscribe for more in-depth chart analysis.